Our next guest gaming out various scenarios for investors, saying stocks exposed to a Republican win may not benefit to the same extent that they did in 2016, and that if Democrats win, many of these recent market moves could unwind. Joining us here at Post 9, Michael Zezas, Morgan Stanley, head of U.S. Public Policy Research. Welcome.
Yeah, thank you. Thanks for having me.
I'm sure you've been in very high demand lately from investors.
It's been busy enough.
There's this conventional wisdom, right, that if Trump wins, and especially if he gets a sweep, that's good for the markets. If she wins and it's a divided government, it's good for the markets, and a Democratic sweep is bad for the markets. Is that too simplistic? What are we missing? I
think so. I mean, I think a lot of conclusions about what happens at the index level are pretty simplistic, right? Because there's so many unknowns with like the post-election policy path, how it's sequenced, how severe it is, and I think you can really kind of see into that what you want. Where I think there's probably more signal is at the sector level, right? So what you've seen, I think, as prediction markets have kind of moved in favor of Trump over the last few weeks, you've seen some of the sectors that should do better in a Trump win scenario do better, and that makes sense. But it means that if Trump wins, there's probably not as much near-term performance there. Some of the stuff that has been a bit weaker, like consumer retail and brands, unperceived tariffs, that's the kind of thing that maybe does better on a Harris win, right? But that to me is kind of where the real signals are. I think if you're kind of leaning into a specific outcome for the index, there's a good chance you're going to be wrong.
What else would a Harris win mean for the market and the economy, especially in a divided government? The president has power over foreign policy, trade, immigration. Mm-hmm. So what does that look like?
Yeah. So I think a Harris win in a lot of ways is defined by the things that wouldn't happen if Trump were to win, right? So you're not necessarily going to see a lot of new tariffs. You're probably not going to see substantial new immigration curbs beyond what's already happened. So those are two things that would have been kind of growth challenging that Harris wouldn't necessarily bring to bear. And Harris win scenarios probably come with kind of smaller deficit outcomes for 2026 because there's less tax extensions that they want to do. They also want to bring new revenue to the table. So that's a bit more of kind of a status quo. So I think where you could see more of that impact is actually in the fixed income markets, where there's been a bit of a kind of breather lately, but there had been this move to higher yields, steeper curves. Some of that could retrace in the Harris win scenario.
You mentioned, I guess it sounds like you're suggesting there is some asymmetry, right, where potential Trump policies are a little bit more out of the money than Harris policies. How is that affecting price action in general, do you think? Is the market chasing that because those outcomes could be more extreme?
Well, I think that's probably true. I think it's also probably that over the last few weeks when you saw prediction markets and you saw a lot of other measures kind of showing that perhaps Trump was going to do better, there's a lot of kind of pricing in of perceived trades of sectors that do better in a Republican win scenario. Some of that's kind of come off because we had a weekend of a kind of more mixed polling and some observations in the other direction. I think we're actually going into this event a little more balanced than we were on Friday because of that. We've got some good reminders in polls that basically polling errors can go in either direction. Either candidate could be undercounted here. So while I think we're going in with a little bit better balance, on net, there's probably a little more probability baked into the markets with the idea that Trump's going to win relative to Harris.
Fanny and Freddy, do you have anything to say on that? I don't know if you get any questions on it because it's been a very key sort of Trump trade. You know, obviously the idea that they would be taken out of conservatorship under a Trump administration. They didn't quite get to it the last time when Secretary Mnuchin was unable to sort of get there.
Well, listen, I think it's the sort of fair reading that the probability of policy changing around Fannie and Freddie goes up considerably if Trump were to win. And even so, or you probably need a sweep scenario to really kind of clear the path to that. It's a major legislative lift, a major regulatory lift. So in Harris win scenarios, not to say that it's impossible, but far less likely. And so I think that's probably the right read if that's the way the market's reading it.
How much money do the tariffs bring in if he goes with what he's plans? Do you know?
Well, listen, I think some of the estimates out there, like if you do 10% on all incoming imports.
And 60 on China.
Yeah, I mean, $300 or $400 billion. But these are static numbers, right? So when you say, we could collect $300 or $400 billion in tariffs, what you're not accounting for, and economists have been really good at pointing this out, is, well, what about when people change their behavior about consuming those? There's less of a base to actually tax, and so therefore those revenues could kind of come down. So it's potentially a pretty big pool of revenue that could come in. But also, we don't think that that kind of blanket tariff scenario is the most likely outcome. There's probably plenty of tariffs across a wide geography that could be instituted, but you probably need Congress to sign off on something like a blanket tariff. And so if you don't have that, you're going to be targeting China, you're going to be targeting Europe, potentially targeting Mexico, but not necessarily the whole world.
Okay. Michael, well, thank you very much for joining us. Yeah.